Good day everyone, this is Bernadette M. Magaling and I'll be reporting inventories, specifically inventories of government entities. So, we have two learning objectives here. These are first to account for inventories by a government entity and to describe the process or procedures undertaken by government entities' receipt and disposition of inventories. So, first off, let us define inventories. So, inventories are assets that are held for sale or distribution in the ordinary course of operations, or what you call the finished goods. And inventories also are in the process of production for sale or distribution, or the work in process. And inventories are assets in the form of materials or supplies to be consumed in the production process or distributed in the rendering of services, or what you call the raw materials and supplies. When it comes to inventories of government entity, they are classified as follows. So letter A, inventory held for sale, just like medicines for sale in government pharmacies. Letter B, inventory held for distribution, kagaya ng mga food supplies, yung mga bigas, and other welfare goods held for distribution. Next is inventory held for manufacturing, which includes raw materials and work in process, as we know. So next is inventory held for consumption, which includes office supplies inventory, food supplies inventory, or drug and supplies inventory. And last is the semi-expandable property, kung saan ito daw yung mga property ng government entity kung saan hindi na-capitalize as PPE kasi mas mababa sa 15,000 yung capitalization nila, which is not in the threshold of for PPE of more than 15,000. So these inventories are initially measured at cost and subsequently measured at lower of cost and net realizable value when it comes to goods held for sale, while for goods held for distribution, lower of cost and current replacement cost. Net realizable value, as we know, is the estimated selling price less estimated cost of completion and estimated selling or disposal cost, while the current replacement cost is the cost the entity would incur to acquire the asset on the reporting date. So the cost comprises the purchase cost, which excludes the trade discounts, and the direct cost incurred in bringing the asset to its intended location and condition. This direct cost includes the freight cost, conversion costs such as cost of labor, and production overhead for manufactured items. So, moreover, next slide. So, cost excludes the following: the abnormal amounts of wasted materials, labor and production overhead, selling cost, and administrative overheads. We have here the exceptions, however, wherein inventories received from non-exchange transactions, or what you call the donations, are initially measured at acquisition date fair value, while agricultural produce are initially measured at fair value less cost to sell at the point of the harvest. So cost of goods sold and cost of inventories on hand are determined using the following cost formulas: the specific identification and the weighted average cost. A specific identification, as the name suggests, is used for items that are unique and those that are segregated for specific projects, while weighted average cost, on the other hand, are used for large numbers of items of inventory that are ordinarily interchangeable. Under the specific identification method, specific costs are attributed to identified items of inventory. Accordingly, cost of sales represents the actual cost of the specific item sold, while ending inventory represents the actual cost of the specific items on hand. Under the weighted average cost, on the other hand, which traditionally referred to as moving average cost formula, a new weighted average unit cost is computed after every purchase. So the computed average costs are used in determining the cost of goods sold and inventory on hand. Accordingly, cost of sales and ending inventory are stated at average cost rather than at the actual cost of the inventory sold or on hand. The advantage of specific identification is that it introduces a high degree of accuracy to the cost of inventory, since the exact cost at which something was purchased can be recorded in the inventory records and charge the cost of goods sold when the related item sold. While the disadvantages of this is that it is rarely used because there are few purchased products that are clearly identified in accounting records with a unique identification code. Moreover, it typically restricted to unique, high-value items for which such differentiation is needed. The advantages of weighted average cost, on the other hand, is that it minimizes the effect of unusually high and low material prices. It is also practical and suitable for charging the cost of materials used to production and enables entity to analyze operating results. It has disadvantages wherein material used may not be charged to production at the current price. The cost charged to production is not the actual cost, and if the receipts are numerous, many calculations are required. It is important to note that government entities shall use the perpetual inventory system. Accordingly, FIFO cost formula and the periodic inventory system are not used by government entities. Perpetual inventory system, as we know, purchases, sales, and other transactions affecting inventory are recorded in the inventory and cost of sales accounts as appropriate. They maintain stock cards and stock ledgers, and purchases of supplies and materials out of the petty cash fund for immediate use or in emergency cases are charged directly as expense. So basically, we recognize expense in the period it is sold, distributed, exchanged, or consumed. The write-down of inventory to its net realizable value or current replacement cost as appropriate is also recognized as expense, wherein only the portion of the carrying amount in the excess of the net realizable value or the current replacement cost is recognized as expense. So here is the journal entries for initial recognition of inventories, for inventory held for sale, inventory held for manufacturing, inventory held for distribution, inventory held for consumption, and semi-expandable property. As we can observe, the credit for all the kinds of inventories are the same, and they differ only in the debit side, wherein inventory held for sale we debit in merchandise inventory, inventory held for manufacturing we debit raw materials inventory, we debit welfare goods for distribution for inventory held for distribution, and we debit office supplies inventory held for consumption, and we debit semi-expandable machinery for a semi-expandable property. We have here an illustration wherein entity A acquires inventory for 1,000 on account. So if it is an inventory held for sale, we have the journal entry merchandise inventory debit 1,000 and credit to accounts payable 1,000. Inventory held for manufacturing raw materials inventory 1,000 and credit to accounts payable 1,000. Inventory held for distribution welfare goods for distribution 1,000 and a credit to accounts payable 1,000. Inventory held for consumption office supplies inventory and credit to accounts payable 1,000. When it comes to semi-expandable property, semi-expandable machinery 1,000 and a credit to accounts payable 1,000. So subsequently, entity A recognizes the cost of inventory of 800 as expense. So inventory held for sale, we debit cost of sales 800 and merchandise inventory 800. Inventory held for distribution, we debit welfare goods for expense and credit welfare goods for distribution 800 pesos. For inventory held for consumption, office supplies expense and credit to office supplies inventory 800 pesos. While in semi-expandable property, semi-expandable machinery and equipment expenses, and semi-expandable machinery 800 pesos. When it comes to inventory held for manufacturing naman, we have different approach wherein we debit work in process inventory 2,000, raw materials inventory natin ay 800, direct labor ay 900, manufacturing overhead ay 300, daw to recognize transfer of raw materials, direct labor, and manufacturing overhead to production process. So, ang finished goods inventory natin ay 2,000. Work in process inventory natin ay 2,000 to recognize transfer of completed units to finished goods, after which ay close natin yung finished goods inventory to cost of sales, wherein we debit cost of sales 2,000 and finished goods inventory of 2,000 to recognize cost of sales of finished goods. So, assume naman natin na yung inventory na titira na 200 daw ay are found to have a net realizable value of 150 and current replacement cost of 180. As of this remaining cost, sa inventory held for sale, the basis will be the net realizable value of 150, while inventory held for distribution, the basis will be the current replacement cost, wherein we debit impairment loss inventories and credit to merchandise inventory. We get this by subtracting 200 to 150. While the inventory held for distribution, we debit impairment loss inventories of 20 and welfare goods for distribution of 20, wherein we get this by subtracting 200 and 180. Moving forward, we will now go to our second objective, which is the receipt and disposition of inventories. Here, the series of processes of acquiring or the receipt of inventory of a government entity will be explained. So, first is the preparation of purchase request form by end users who can be those working in the office, needing the office supplies, janitors who need cleaning materials, and the like. So, bilang internal control dito sa phase na ito ay ang ina-allow lang na maggawa ng purchase request form ay yung mga department na inappropriate na maggawa nun. Kasi inappropriate naman, kagaya nun, inappropriate naman na gumawa ng purchase request ang office clerk para sa cleaning materials kasi supposedly yun ay ginagawa ng mga janitors. So next step is the authorized official prepares the purchase order or the PO. So, a PO serves as a contract between the entity and the supplier. So, it is issued to the supplier when making a purchase. Ito nag-indicate siya ng specifications, yung quantity, at yung agreed prices of the items being purchased. So, it is important to note that in this process, a canvas from at least 3 suppliers is required for purchases amounting to 1,000 and above. So, the next phase will be the delivery of the purchase items. At kapag na-deliver na daw yon, yung property or the supply division ang maperma dun sa received portion of the delivery receipt. And they will prepare inspection and acceptance report, which will be used by the property inspector for inspection. So, next step is the property inspector will inspect the delivered items and fills up the inspection and acceptance report. So, rejected deliveries, yung mga na-reject deliveries ay mabalik natin sa supplier, and the property inspector will forward the copies of the DR, the inspection acceptance report, and the PO to both the property or supply division and the accounting division for reporting. So after na mabigay na nung property inspector yung mga na-accept na deliveries, record na ito ng property or supply division in a stock cards, wherein the stock cards shows the quantities of all receipts and issuances of inventory as well as the available balance at any given point of time. So next is, di ba binigyan ng copy yung accounting division ng property inspectors. Yung accounting division naman ang magre-record ng the accepted deliveries in the books of accounts and the supplies ledger cards, wherein the SLC or the supplies ledger cards shows both the quantities and the monetary amounts of all receipts and issuances of inventory, as well as the available balance at any given point at time. So, bilang internal control dito, yung SC or the stock cards and the SLC ay mare-reconcile lagi, which will be maintained by the Property Supply Division when it comes to stock cards, and the supplies ledger card by the Accounting Division. So after the daw na record nung Property Supply Division and the Accounting Division, mag-prepare naman na daw yung Property or Supply Division ng disbursement voucher, kung saan ito na yung apasa sa Accounting Division para sa processing ng pagbabayad. So the next phase will be the disposition, wherein the end users will now use the purchase items, and the first thing they need to do is to prepare the requisition and issue slip, which shall be approved by the head of the requesting individual and forwarded to the Property Supply Division, who will prepare the report of supplies and materials issued. So the report of suppliers and material issued, or the RSMI, will be used by the stock card keeper in updating the stock card and the Accounting Division in journalizing the items issued. After which, or the issuance of the purchase items, the Accounting Division will now record the items issued in the books of accounts and updates the stock ledger card. Aside from the reports or documents mentioned earlier, we have here the other documents essential for the receipt and disposition of inventories. First is the waste material report, wherein it is used to report wasted materials such as destroyed spare parts and other spoilages. The report on physical count of inventories, which is used in reporting the results of physical counts. The report of accountability for accountable forms, which is used to report the movement and status of accountable forms in the possession of an officer, and the inventory custodian slip, wherein it is prepared when issuing semi-expandable property. So that's all. Thank you for listening, and I hope you are safe, and may God bless us all.